We continue now with our series on heavy metals. The CME Group increased margin requirements 5 times in a 2-week period. And silver reacted. After reaching an all-time high in April, it tumbled more than 30%, the biggest drop in such a time period in 30 years. Earlier, I spoke with Harriet Hunnable, CME's managing director for metals, and asked her why.
Well, you know, the markets have become very volatile. We've seen a real increase in market volatility and also in implied option volatility. And that's been the major determinant in changing our margin requirements for the exchange.
Although as a result of your boosting the margin requirements for silver, you drove the price down, I think the most that it's been driven down in 5 trading days in 30 years, a 30% decline in silver.
You know
From an outside onlooker, it could seem as if you're trying to drive the price of silver down.
Well, you know what? You had a great show yesterday with Jeff Christian from CPM, and he told you there that those allegations are really off the mark. It's important that traders, investors, everybody involved in the market knows that when they trade on an exchange, there's sufficient margin to back up those trades. And in highly volatile markets, margins may be increased to try and ensure that the market works really efficiently, and that's simply what we did. And you know what? Since the beginning of 2009, we've actually changed our silver margins up and down 23 times because volatility changes that much.
So can investors expect then when the volatility is taken out of the silver market, you will reduce margin requirements again?
Absolutely. Every day we look at the market, we look at volatility, we do the same calculations. Prices up or down, if volatility falls significantly, we will look to reduce our margin requirement. We'll signal that to the market, and we'll give the market a day's notice before we change the market requirements.
You have advised market participants of 59 changes, I think, since the beginning of this year. That compares to 66 for all of 2010. Why so much activity in just the first 5 months of this year?
Well, across a number of different asset classes that are traded on CME exchanges, that's foreign exchange, that's agriculture, energy, metals, rates, and so on, we've had a volatile market, so we've had to put out those notices.
You see as well a good reason for people to buy precious metals, right, as a hedge to global events, as a hedge to concerns about inflation. I mean, the interest, I'm sure, has grown significantly this year.
We're not here to advise people whether to buy or to sell, but certainly we do see very strong investor interest in commodities and in particular in metals as an alternative asset class. And some of that is driven by concerns about what's happening with governments and political risk, certainly. But we also see a great deal of underlying activity from commercials. That's corporates trying to manage their price risk in our markets, and that's certainly a major feature of what price activity is happening, is underlying supply and demand.
What if you look at the role that China plays in the metals markets? I mean, has that grown significantly? Obviously, they have an economy that's growing at a rapid clip, and they're looking to stock up on metals of all kinds to help build that economy out.
Yeah, you know, I think China's an important part of all of our financial markets, and indeed next week I'm in Shanghai for the LBMA Gold seminar for the Chinese market, and I'll be meeting a number of Chinese participants. But I don't think that China is the only story here. There's a lot happening in EMEA. I'm based in London to work with the London gold market, which is a very important part of the metals business, and also in the US and elsewhere in the world. So it's not just a China story.
What about if you look at away at other metals besides the precious metals? We had CPI data here in the U.S. today, higher than expected, driven partially by automakers. And you had a blog post yesterday actually talking about steel prices that car makers use continue to rise, and that's why they're trying to pass along the cost. What's behind that gain?
That's right. You know, at the CME Group, we've got a metals offering that enables producers and consumers to manage risk. So we've just launched 3 new European steel products, as well as China's iron ore swap and option. and our US HRC contract, and that really enables people to manage that risk. And you know what? The iron and steel industry faces significant price volatility. So these guys need products to manage their risk. The whole world for iron and steel has changed radically in 4 years, and we're addressing that by providing products to enable them to manage that risk and trade as they want to.
And that was Harriet Hunnable of CME Group coming to us from London.